Eric Muad with Muad.com with a weekend analysis for the weekend of July 11th and July 12th, 2015. Let's take a look at how markets in the US closed on Friday. We see that markets were up nicely, about 1%, and we also see that the VIX was down about 15% on Friday. For the week, we see that the S&P 500 closed higher, about 0.12% for the week. And for the week, we see that the Dow, or the NASDAQ rather, the NASDAQ was almost unchanged. And for the week, we see that the Dow was slightly positive, up about 0.30%. If we take a look at the NASDAQ weekly, just like the Dow and the S&P 500, the biggest takeaway here is we still continue trading above the 50 level on the weekly RSI. This market's been locked in this stage for a long time, which indicates that generally speaking the market is still healthy. In fact, if you take a look at the weekly chart, 5-year weekly chart for the NASDAQ, and draw a simple line connecting these lows going back to 2011, 2012, through the lows of 2014 and the lows of 2015, draw a straight line on the weekly, something like that. You can see that the market is trading exactly and ended the week exactly on this line. So going back to this trend line, which has been in place for many years, the market, as far as the NASDAQ is concerned, continues to be acting surprisingly very well. If we take a look at the NASDAQ daily, it needed to be above this line with uniform activity. As of right now, it looks like this is a nice double bottom support back above that green line. So really you can argue that the market is already showing us rebound possibility based on the support on this line here. There's also another line, a little bit of a confusing line, but I'll explain that. You can see this line here corresponds with this breakout here. That breakout began this move in 2015. Market hasn't been back to those levels since then. So that line has been very instrumental in moving the market higher. As you can see, we went on to new highs. And how we know that this can be support is every time we've come back to this backtest line and held, the market bounced. We held again here with uniform activity, double bottom. The market bounced. We had another instant of double bottom support here, and the market bounced. And we see here that the market is forming a double bottom again, which might indicate that in the coming days and weeks, more than likely, the potential is for this market to move higher. And in fact, if you take a look at the Dow weekly, you see this makes a lot of sense. Number one, notice that the Dow has been bouncing and holding, generally speaking, holding above the 50 level area. As you can see, all this period here, it moved back above 50 for a nice rebound, moved back above 50 here with uniform activity, which was this area. It touched the 50 level here, which was the beginning of 2013. Again, uniform activity at 50, nice bounce. Uniform activity at 50, on and on and on. Even this low here was with the market moving below 50 and back above it with uniform activity. Even this low, the market bounced at 50. So you can see that the Dow could very easily be jumping back above 50 in the coming week or so, suggesting that it could actually be preparing itself to go higher. There's another way to take a look at this, which is a line connecting recent weekly RSI lows. And you can see that with the NASDAQ, the Dow, Dow closing slightly higher this past week, this line is being confirmed as support. So as long as that line is support, the assumption is the market could actually go higher, maybe as high enough as to make new highs. Of course, let's not get ahead of ourselves. What we can see now is support. Now keep in mind, there's nothing stopping the market from breaking down. For example, you can see we ended the week with support like that, but you got to be aware of the market deciding to break this line eventually. So a break of that line is obviously going to be a red flag and a reason to be very cautious, if not turn bearish. But for now, we haven't seen the break. All we see is support. We have to assume the market is okay. If we take a look at the Dow daily, we can see that number one, this is nice support around the 50-day moving average. Nice consolidation around the 50-day moving average. Keep in mind, we have an upward sloping, 200-day moving average. So it's the 200-day moving average, and the 200-day moving average is trending higher, which is a good sign. Market seems to be consolidating around there, generally tends to be a good sign. We also see that the line connecting RSI lows has held recently, and that's another reason why this market could bounce. Also the line, this green line where the market needed to hold, has held. So using this daily chart, we have to assume that the market wants to bounce. If we take a look at the 5-year weekly, the 5-year weekly chart for the Dow, and we are going to again connect the lows on the weekly RSI, we're going to see that this market seems to be holding the support line right there. So right now we are looking at this being support. This is a multi-year trend line on the weekly RSI. As long as that is holding, expect the market to bounce. On the other hand, if we break this multi-year trend line, that's going to be bearish. Since we haven't seen the bearish signal, we have to assume that for now the market is holding this line, and the only reason why it is holding this line is because it wants to move higher. Until we see the break, we have to assume this is good support and that the market wants to move higher. If we take a look at the Dow Transports, we've been talking about off the lows here in 2011. There was a RSI breakout here. This RSI breakout, as you can see, was successful in taking the Dow Transports from these lows all the way to new highs over a period of three years or so. So we can take that information and draw a straight line from here. And you can see as of right now, the Dow Transports are doing their best to hold this RSI line of defense. If they can hold that line, more than likely even the Dow Transports are going to recover. Of course, if we break through that line, any break through that line is going to be bearish. But we haven't seen the break, so we have to assume that the market wants to move higher. Take a look at the Dow Transports daily, and on the daily we can see that the market has already given us a reason to expect the market to continue moving higher based on the daily lows line. So the lows on the daily RSI have held over the last couple of days, and the market is recovering. So that's one line of indication of where the market wants to go, and also it is above this line here. So those two lines manage to offer the Dow Transports some support. Generally speaking, that's one way you can start correcting a broken chart. But the problem is, and it is a problem, is if we take a look at where it is closing here at the end of the week, we can see that it is coming close to this line of resistance. The last time it came in contact with this line here was during this peak. So depending on whether this becomes resistance, if it becomes resistance, expect this market to also day to day be pulling back. If you take a look at the Dow Transports hourly, there's an indication that it has come back to a resistance line on the hourly. If you take the top side of the hourly RSI, the market ended exactly where it could be finding resistance. So that is confirmed resistance. As we begin the new week, expect prices to pull back. Otherwise, if this market really wants to press and move higher, it needs to break out above this very clearly defined line of resistance. Okay, if we take a look now at the S&P 500 five-year weekly chart, and we connect the lows, connect this low with this low here, you can see that it is back to support line right there. So if this becomes support, expect the market to bounce. Otherwise, if the market breaks through that line, then we are going to expect there to be another plunge in the market. So it's either support or break. So that's the 5-year view. Take a look at the 2-year view, and you can see that the S&P 500 has been holding above the 50 line, the 50 level on the weekly RSI going back many years. And so if this becomes another support back above 50, then the market is going to be truly ready to bounce. Keep in mind the S&P 500 closed at 49.46 on the weekly RSI. So in the coming week, if it moves above 50, expect it to be pressing higher. So any RSI move above 50 in the coming week would suggest a net big up week for the general market. Just like some of the other markets we've been looking at, S&P 500 is showing support on this green line, which is good. All this is very good support on the daily RSI, very good support. And we also see that it managed to move above the previous line of resistance or support. So it managed to hold above this line also. So those two lines came in play and the market did hold. Indication there is that the S&P 500 should be looking to go higher based on the daily chart. If we take a look at the S&P 500 from an hourly chart, you can see off the highs here, the RSI broke down there. So there was a break in the RSI on the hourly, and we can draw a line from there. That line should give us some indication of where it has been finding resistance. As you can see, we had resistance here for a short-term high, another break of that resistance line, which is off the highs here, and we ended the week exactly on that line. So above the red line, market moves higher. If it shows resistance hour to hour, then the market pulls back. Take a look at the 30-minute chart for the S&P 500. So the 30-minute chart, and you can see that recently we came off the highs here, which corresponds with this RSI break. We can draw a line from there like that, and we can see that we ended exactly at the resistance line. So if we can move above that line, that's bullish. Otherwise, if we continue showing resistance on this 30-minute chart, the indication is that the market starts the week with a down note. If we extend this line backwards like this, so extend the line going backwards, and you can see that it gives you a nice break off the highs. Market broke down here, which actually also happens to be this break. And all the highs since then, there was a high after this resistance, and also again the break of that line gave us this high. So this line is one that we've been seeing on the charts for a while. Above the line is bullish, otherwise below the line and showing resistance would indicate that the markets are due for a pullback at the beginning of the week. One of the strongest arguments for a market that wants to go up is the VIX. If you take a look at the VXX, the ETF that tracks the VIX, you can see that it has come back to a line of resistance. Let's just draw it right there. The last time we hit this resistance line was here for these highs. Right now it looks like we are forming what looks like a triple top on the VIX, which is a triple confirmation of resistance, indicating that if the VIX is going to go down, then the market is going to rally. In fact, if we take a look at the VIX itself, the ETF, the index itself, we can see that the VIX itself is showing us resistance based on that line. And if you go back and check, you'll see that the VIX has been struggling to hold above this line throughout these highs. Uniform activity above the red line, back below it for those highs. Uniform activity above the red line, back below it, which gave you this break, and also uniform activity above the line, back below it for those highs. So the fact that we see double top here on the VIX short term indicates that this is a market that wants to go down, or this index wants to go down. And if this index is going down, the indication is that the general market is going to rally. So that's a thing to watch. Otherwise, if you want to take a look at the precise levels to watch on the VIX, you have to go to the closing prices recently. And let me share with you. So you can see that if the VIX is to do well, it needs to break out above 19.97, which is the recent daily closing high. Right now we are looking at the VIX, which after it recently moved above 15.39, it has not closed below this range. So it broke out here, and since then it's been trading above that. So could be some reason here to watch this. I'm not sure which way it wants to go, but I'm just a little bit cautious because of that double top on the VIX. Now, I didn't want to talk about this, but there's also another line here to watch. Short term, we broke out above this line, this red line. The market did break out. This breakout corresponds with this move. Since then, we haven't closed below this line extension. So there could be some argument that maybe the VIX stays sideways here before breaking out above 19.97. So just watch that. I think for now, my conclusion is more than likely we go to a clean chart for the VIX on the daily. This is not looking good for the VIX. So I think if I was to take one observation, is that the VIX has given us a double top, which is not good. There's also resistance connecting the highs like that. So this has been confirmed resistant recently. My thinking is that the VIX stalls and the market moves higher. Of course, if it breaks out above this recent daily closing high of 19.97, any breakout above that would suggest that the market is in trouble. One of the reasons why I think the VIX is going to struggle is because we see that it made a higher high intraday on the hourly, but the RSIs did not follow through. So that negative divergence is pretty much an indication that this market is, or the VIX is running out of momentum, and that the general market is going to be moving higher. If we take a look at Apple on the weekly, slight and a very simple observation is that this stock has been holding above the 50 on the weekly RSI, just like the main markets, going back many years. So if you are looking for a re-entry in the stock, coming to the 50 has been where it has been logical to go long. And if it moves back above 50, and if it stays above 50 and shows a bounce back above 50 here, then somewhere around here at about 120, 121, 122 is where you want to go long, because it's been bouncing very nicely at the 50 level on the daily RSI, on the weekly RSI. Take a look at the daily, and the daily seems like it came close to the 200-day moving average, did not get there, and seems to be coiling back up. The best way to see this is take a 2-year view on Apple, and I'll explain why. If you take a look at a 2-year daily chart, you'll see that it has been bouncing right there on this day on the RSI. Every time it bounces on the RSI with uniform activity back above the green line, it moves higher. It bounced here with uniform activity, which was this entry, uniform activity bounce, which was this nice entry on the daily, and every time it comes here with uniform activity, the stock has been a buy, double bottom here, which is this period, and now we are below that green line and back above it. That suggests to me that day to day, even Apple looks set to move higher. Now, if you go back to a 5-year weekly chart for Apple, you'll notice that the period when it was in trouble, or at least was pulling back, was this period here, was when it was down, and that corresponds with the stock being or trading below RSI, weekly RSI 50. So if it moves back below 50 on a weekly time frame on the RSI, that's when it's going to have a slightly steep drop. For now, if it holds 50, that's good. And again, we see confirmation that during this pullback here, this zone when it was trading lower over a period of months is when the RSI was trading below 50. So if it bounces on the 50, that's good. If it stays below 50, maybe it's due for a deeper drop. If you take a look at the monthly for the S&P 500, as long as it is positive for the month, any positive move would suggest that it is coiling and maybe might be making an attempt to break out on the monthly. And the monthly level to watch for a breakout on the S&P 500 is 2107.39. If it can break out above that, if it can reclaim the level above 69.10, that would be very strong. Keep in mind that during the period when it moved above 69.10 here, which was early 2013, it has maintained that level above 69.1 generally until recently. So if it reclaims back above 69.1, if it breaks out to new monthly closing highs, expect there to be another spike in markets to fresh highs. Take a look at the Dow on the monthly. The monthly chart shows that the Dow is positive. If it's positive for the month, it could be making an attempt to eventually break out to fresh monthly closing highs. monthly breakout would suggest that the Dow needs to move above 18,132.70. Any breakout above that would indicate that markets have stabilized and are actually pressing to new highs. So we need to watch for that. Right now the Dow is a little bit off its 69.1 level, so it's not leadership. Leadership in the market right now can be seen in the NASDAQ, and the NASDAQ continues to stay above 69.1. Now at some point in the past week it was below 69.1, but it is still closing the week here above 69.1, which is a sign of strength. And again, the NASDAQ might have a chance of breaking out to fresh monthly closing highs if it can stay and hold above the previous monthly closing high of 5,070.03. So watch that level. Anything above that 5,070 level would indicate a fresh breakout. Keep in mind, NASDAQ is already trading above 69.1. So as long as markets are trading above 69.1, this market could take off. But for now, I think the leadership is NASDAQ, followed by the S&P 500, which could easily trade back above 69.1. Otherwise, I guess we just have to wait and see whether the hourly charts, go back to the S&P 500 hourly charts, whether it's going to show resistance because it closed exactly at the resistance line, or if we start the week trading lower because the S&P 500 30-minute chart is also ending the week and ended the week at resistance. So either we show a pullback at the beginning of the week, or we show a breakout above that line to begin the week with a nice positive note. Eric Muadh, mother.com. Enjoy your weekend. Good luck, peace, and blessings. I am out for now, but I shall be back. I shall be back. Yeah, I shall be back. I shall be back at some point. At some point I shall be back. Why should I not be back at some point? Anyway, enjoy your weekend. Eric Muadh with mother.com. Good luck, peace, and blessings. EACS.